Joining us now, Punit Lalbhai, who is the Vice Chairman of the company and Managing Director, joins in. Arvind actually reported a weak set of numbers. The revenues were under pressure, down about 15%. The gross profit margin has come down as well. The textile segment is under pressure. So let's find out more. Punit, thanks a lot for joining in and appreciate your time here at CNBC-TV18. I just wanted to understand, most of your segments are under pressure, the denims business, the garment business. So overall, are you looking at a consumption slowdown or is it just company specific? Just trying to understand where the pressure has creeped in from, and is it something that can extend for the next couple of quarters?
So the way we see this results is a reasonably decent performance in a very difficult market situation. I think the last year has been particularly challenging from an inflation perspective in some of our key markets. So discretionary spending is down. A lot of inventories had piled up because of the post-COVID euphoria buying. And then post-Ukraine, those inventories have taken a long time to clear. However, now we see that, those inventories are coming down. And we also see that brands have bought extremely low levels for the last couple of quarters. So that buying, we are seeing a small uptick. However, for the near term, next couple of quarters at least, we see a very cautious and muted sort of demand cycle. However, I think one has to look at our business in a couple of different ways. So one is, of course, the traditional textile business, which of course is under the demand pressure that we were talking about. We are very excited about our advanced materials division, which has been showing upwards of 20% growth for the last 4 or 5 years. And now it's started to reach material levels. We posted a turnover of 1,250 crores last year with much better margins. We posted a margin improvement of over 130 basis points, and the competitive framework and margin profile of that business is very robust, and we see the future as well quite bright for that segment, and it should start having a larger share in our overall scheme of things.
Okay. Punit, you did mention that you're a bit cautious going forward as well in terms of what you would probably project in terms of your business in the next couple of quarters. So are we still expecting a decline in revenue and margins of around 10% or maybe even sub 10% in the coming quarters? Do you have that kind of visibility that you can share with us?
Yes, so I think we are looking at a growth overall in the year. So we are not looking at revenue declines. I think we are trending up in most of the segments that remained muted last year. However, the immediate 2 quarters, you should expect more of the same. And on current visibility, the second half of the year is looking where the upticks are looking like where the upticks are going to come. So second half of the year should look better. Current couple of quarters muted on the textile side. However, advanced materials division should also grow above 20% this year with a very healthy margin. So there is going to be growth in several parts of our business.
Down, but that means that the first half, there's a likelihood that you're going to see a similar quarter performance as you have in Q4. And second half is when you're probably going to see such a strong recovery that you're probably going to see growth come through. Is that correct?
So we should see quarter-on-quarter growth. However, margin profiles will remain where they are for the first half, and the next half should look better, with advanced materials looking good in all 4 quarters.
Okay, the long-term debt has come down quite a bit actually, from about 750 crores to less than 400 crores in FY23. I just wanted, an outlook on that. Are you planning to reduce your debt further? And I'm asking in the context of the 600 crore capex plan that you have. Have you taken on any debt for it, or will it be through internal accruals? And what is the way forward?
So we are planning to reduce long-term debt. But as far as overall debt is concerned, we are quite now comfortable with all our ratios. Our debt to EBITDA is below 2. And we are the level of risk that we have removed from our balance sheet across the last couple of years has been quite significant. So we'll continue to try and repay the long-term debt. The capex cycle is mostly going to be funded through internal accruals completely.
Okay. All right, Punit, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is Arvind. The stock is doing well. It's up around 5% at this point in time. Just want to point out a couple of stocks.